Hello, I'm Nigel Croft and this is TA for Traders on Thursday the 23rd of March. In this short video I'll be looking at the technical analysis on two stocks, one US stock Nvidia and one UK stock Tesco. In the video I'll be highlighting the technical analysis of these stocks, what technical analysts would be looking at in regards to support and resistance, in regards to a trend, and really giving an indication of which way a technical analyst would be looking to trade these stocks. Thank you. So starting with Nvidia, and you can see that it's had a good move over the last 10 days. It did look like we'd broken this downtrend, but now we've actually, it looks like we're back into the old trend. Technical analysts would be taking a positive view that we've gone back through the downtrend in 20-day and that it only caused a small amount of congestion on the shares and it pushed through quite quickly, and that we're already trading back above the 50-day. You can also see that the 50-day moving average is turning upwards slightly, so that will be giving support to the market. On the RSI, it didn't quite go oversold in the sell-off, but it's broken its trend and is back in an uptrend, which is indicative of positive momentum. Also, you can see from the MACD that the short-term trend, the blue line, is above the longer-term trend in the MACD, the long line, and that's a bullish signal that technical analysts also look for. On the longer-term picture, this is a weekly chart, so each bar represents 1 week. You can see that obviously it's had a very good run since October. We had the consolidation. It found immediate support at the 20-week moving average, which is moving up strongly, presently at 102.12, and is giving a push up to Nvidia. You can see that there is resistance on the upside, up to about the 1819 level on this weekly from those two weekly highs. But even there, that high is higher than the higher that was in the week of 6th of Feb was higher than in the week of 26th December, so that was a positive sign. MACD not as positive. You can see that the shorter term is below the longer term, and the RSI also is in a downtrend. On a longer term chart, this is a weekly, they're not quite as important, those the MACD and the RSI, but just worth keeping an eye on them. Now looking at the short term, excuse me, this is a 4-hour chart. So each bar represents just 4 hours of trading. What can we see here? Well, the consolidation came back towards the 200-day moving average, which was this rising red line. It didn't actually touch it, but that was giving support, and then we've moved up. We've moved back above not the 200 days, so it's the 200 4-hour moving average. The yellow line is the 20 average of the 4 hours, and the downtrending is the 50 average. You can see the 20 has gone above the 50, which is a good sign, although one was going up, one was going down, so not such a strong signal, but it's still okay. The 24-hour moving average here would give support on the short term at 104.45. RSI neutral, the MACD neutral, the RSI slightly positive at 59.23. Looking at the support resistances, this is from the dailies, from the daily charts. There's resistance at 109.96 and then at 111.8, with the support at the 20-day 102.33 and then down at 95.17. Right, moving on to Tesco. Let's get the chart up for you. You can see that it's been, I don't even need to draw it here, you can see a downtrend that's been in place, and we're still in this downtrend. In fact, you can see the market down trending Each bar here represents 1 day, and you can see that Tesco's moved down with its 20-day moving average, which is that yellow line. We've now come all the way back to the 200-day moving average, which is the red line. Now, technical analysts will be seeing that as a support level, and they'll be hopeful that because it's moving upwards, that it'll give the market a push upwards. We have today, there's been an upgrade by Deutsche Bank. We have moved above the 20-day, which is a good sign, although it is still moving downwards. Also today, it's been positive that the RSI has bounced, not into positive territory. It's still below 50 at 48, but it is positive. It's moved up. If you can break above the high that we had on the 13th of March, 47.43, that would be good. And you can see that the MACDs are rolling. It's starting to roll upwards as well. Not quite indicative of what a technical analyst would see as bullish when the short term's above the longer term, but could be there in a day or two. On the longer term picture, you can see this downtrend that we've been in, and you can see that the market's got gain support here from the 50-week moving average, which is the blue line. The signs here, because it's a longer term chart, and as I've already said, on the weeklies, the RSI and MACD aren't as important. It's really on the daily where they are important, and on the 4-hour. But it's an interesting chart to keep an eye on over the next week. If we can break up even towards the 50-day at 193, that would be a very positive sign, and a sign that the downtrend has been broken, that further upside can be expected. So technical analysts will be looking for that to occur for the upside. On the downside, there's key support levels. The support resistances are here, and the key support level is the 200-day at 186.79 and 184.05. If they're broken, technical analysts will be worried, and the resistance is on the upside, as I've already mentioned, the 50-day at 193.49 and at 191.46. So, as I said, keep an eye on it, and the key resistance levels, if they're broken, it'll break the downtrend. But be careful if the market, if this Tesco does move lower and test that support again, it could be indicative of a lower move and a continuation of the downtrend. This has been TA for Traders on Thursday the 23rd of March. I hope you've enjoyed the video. I'll be back tomorrow with more videos. Thank you very much for watching. Please remember that all the information in this video is not investment advice. It's just my opinions and for an educational purposes only. And please do read the video. Thank you.